No.
Read to us then, Jigna, or read to us, Ashish.
Paid $2,400 cash for office salaries.
What is it?
Office
Salaries.
Salary, 6
of salary.
We paid how much?
$2,400 cash for office salaries.
Okay, so what accounts are involved then, Ashish?
Salary expense.
Salary expense and cash, there you go. Salary expense increasing or decreasing?
Increase.
Debit or credit?
Debit.
Correct answer, how much? 2,400.
2,400.
Is cash increasing or decreasing?
Decrease.
Debit or credit, and how much?
Credit.
Correct answer. So that's how we think in our mind. Increase or decrease, debit or credit. And it's not rocket science, it's a language. So he goes to the section on the income statement section. And Mike just joined our program. It's great to have him because guess what? He's got a really good handle on it. He's just taking accounting 1. He knows the language pretty much. The first 4 chapters are the language. And after that, it gets easier, in a sense. Put your plus minus up there. It does. There's no really easy chapter in accounting, but it does get, this is the language or forget about it. Okay, that's entry 8. And then he posts up to cash. Goes to the cash account, 2,400, entry 8. Okay.
Now we have a Brown withdraw $1,100 from the business for living expense. The owner, it means that the owner withdraw the $1,100 from the business for living expense.
Oh, he took out 1,100 out of the business. What accounts involved? Let's go to Jigna. We'll be biased. Jigna, what is the what accounts are involved here? Tell Mike what accounts are involved.
Withdrawing and living cash.
Give her a chance. Make sure she.
I didn't even see.
Yeah, make her sure.
Last second.
Read it, Jigna.
Brown withdraw 1,100 from the business for living expense. Living expense we don't put in general. Right?
Very good. That's right, because it's a non-business expense. It has nothing to do with the business. Good. So what accounts do you think are involved?
Like capital,
True. She's right. Capital. It's a special account in capital called
Brown's capital.
drawing.
Brown drawing.
Drawing, that's right. So, let me ask you a question. Is cash increasing or decreasing? Look at the entry, or look at the
Decrease.
account. Is
Cash is
cash increasing or decreasing?
Decrease.
Debit or credit to cash, Jigna?
Debit.
Debit.
That's right. So, I'm sorry, what is it?
Debit.
So you're saying cash is decreasing over here? So what is it? Debit? You said cash is decreasing, you're
Yeah.
right. To the business, it's decreasing.
Credit.
Debit or credit?
Credit.
Credit.
This side, the right side. Okay. Okay, so credit that, Mike.
How much was it?
1,100.
1,100 he took out of the business. So Jigna was right. It is an equity account. It's called drawing. So cash decrease. The other account is a debit. So I don't want to say about increase or decrease to that account because that might confuse you. But when we post it, hopefully it'll make sense. Entry 9, that is. Hopefully it should make sense when we post it. So post and draw first. I made the contra account. Mike, see what I do in Jigna? Whenever there's a parent-child relationship, which there is with contra accounts, I put an arrow to indicate that. So the drawing account subtracts from equity. The word contra is Latin. It means against.
So 22,500 minus 1,100.
That's right. That's what the net worth is now at this current time.
So it will be 1,100.
Why don't they just debit this and set up contra accounts?
To indicate case they do it so if the owner could, it just gives the owner extra information. It gives they do that when you get to now. Mary's doing it. Guess what? Mary, hear the question he asked. He asked, why don't they just debit the owner's equity account? Well, in the corporation they do to a special account called what? Retained earnings. But in this case, Mike makes a good point. I guess to give more information. He makes a good point. Why don't they do it to that account? It's a good point. Which we'll go later to talk about accumulated depreciation later on about that. And now,
Mike,
I'll talk about that later.
Mike, the last entry, you gotta go in the class.
Okay, what is it?
Receive a check for $4,200 from a client in a payment on account for commission bill in transaction D.
We received a payment.
Yes.
the reason we received the payment was they owed us money.
Yeah,
And that, see the account receivable up there,
yeah.
that's the account that is for that.
57.
Okay, so now they're gonna pay us some money, Jigna, you see that?
So it's accounts receivable, right?
Accounts receivable. Is account receivable increasing or decreasing, Jigna? Is it getting bigger or smaller after they pay us? Huh?
Bigger.
Getting bigger? Okay. So you're, look at that T account, Jigna. See up there, the account receivable, they owe us 5,700. So you're saying after they pay us, they'll owe us more money? Is that what you're saying? No, they'll owe us more or less.
Less money.
Less.
Okay, so will that account get bigger or smaller?
That one goes bigger.
The account receivable gets bigger.
Yeah.
Account
So they owe us 5,700 now, they pay us money, and they owe us more than 5,700, you're saying?
$4,200.
No, but isn't that one is getting bigger?
Which one getting big? I'm not talking about that one, I'm talking about specifically though, right now, I'm talking about account receivable.
This,
I'm not talking about, the only kind I'm talking about right now is account receivable,
this one
Jigna.
here.
Will it get bigger or smaller after they pay me?
Smaller.
Let her answer, make sure she
No, it
knows.
gets bigger.
Okay, so you're saying you owe me $5,700.
Okay.
You pay me how much money it says?
4,200.
You give me $4,200. You're saying now you owe me more than 5,700?
No,
Or less or more than 5,700?
so less.
Less. So is that account gonna get bigger or smaller?
Smaller.
Debit or credit?
Credit.
Credit.
Correct answer. Okay, so now he's journals first, just to get that clear. That's why I wanna make sure she does get it, Hashish, so I know who you guys are at. So
4,200.
the people in California don't always get it. She needs to get her lesson
So
too.
cash,
So that crediting accounts
cash
receivable?
goes up and accounts receivable go down.
Yes.
Am I right?
True.
Okay.
Now wait a second, no, you're not right. Account receivable goes down.
Which is credited.
Is cash increasing or decreasing?
Cash is increase.
It's decreasing.
So I have less cash or more, you paid me, do we, now wait, okay, now we're doing the books for the company that's, we're owed money by these people. They pay us $4,200, do I have more money or less money, Jigna?
They have less money.
No, I'm saying me, us, we're doing the books for us. I mean, the company that we're doing the books for, we got paid $4,200, Jigna. Do we have more money or less money now?
Less.
So they gave us I just gave you $4,200, and you have less money now, you're saying, to me than before I gave you the $4,200. Is that what you're saying, Jigna?
What now?
No, nothing.
They're paying,
Where?
This one.
they're paying you cash.
Receive a check from
They gave us the money. Jigna, if I give you $4,200, you'll have more money. You won't have less money. You'll be able to, if I give you this money in my pocket, are you gonna have more money or less money?
More.
Therefore, cash is increasing.
So it goes on the debit side.
Debit, good girl, good answer. And that's the journal. And then Mike posted for us.
So post
And
it.
now they're ready to make a trial balance. We'll see if Mike has time. He probably doesn't.
No, I have,